We know that impact finally is becoming a bigger part of people's conversation when we're talking about doing business, and also the awareness around the SDGs is rising. But we also know that talking about impact is one thing, but the true indicator of whether we mean what we say is, well, money. Are we truly putting our money where our mouth is? And to dig deeper into this, we're happy to welcome back someone who is not afraid to ask the tough questions. Dejan Stojanovic is a serial entrepreneur and the founder of Failure Talks and Fuck Up Nights Vienna. And we're really happy to have him back with us at the 1 Million Startup Conference to focus on our second panel now, Impact. Money makes the world go round. Dejan, over to you.
Very, very much. So the first question, like always, is can you hear me? That's number one.
Yes, we can hear you, but we cannot see you yet.
Me out, and I'm trying to get in again to start your video. Let's say, okay. You cannot start your video because the host has disabled it. It's what the system is saying. Can you see me?
We can see you and we can hear you, Dejan. Everything's ready to go.
Thank you so much. I mean, I would be surprised if anything that I'm starting is actually starting without anything that I'm doing is starting without a fuck up. Like having these technical issues, that's part of the game, and I really love it because it just reminds me that, yeah, we're not perfect, but that's something that we're gonna try to understand now when it comes to having an impact on the SDGs. So first of all, thank you very much for having me. My name is Dejan. I'm beyond excited to host such an important panel. I want to welcome everyone to the second one, which is Impact. Money makes the world go around. So in my preparation, I just Googled a little bit and found the Oxford English Dictionary that defines the word impact with a marked effect or influence. Yeah, and obviously we are in the age of influences. So one burning question that, among others, of course, we want to have answered today is money really the only influencer when it comes to having an impact on achieving the SDGs? Before I come to the panelists, there are just two rules I would love to highlight here. First of all, let's make it a lively session. That means also that goes to the panelists, but also to the audience, because this is also the second thing I want to mention. We're going to have a 30-minute expert round speaking about this topic of impact and if money is really having such a big influence as we expect it to have. But if you have any burning questions, then please do me a favor, put them into this chat like you did in the previous panel, and Sophie will help me to state the questions after the 30 minutes. So she's going to be your voice, the voice of the community. Having said that, although this is an online panel, I would still love you to show me some love and put your virtual heads together for the amazing panel that we have today. So first I would love to introduce very briefly Maria Ariza from Mexico. She's a serial entrepreneur and CEO of BIVA, the new stock exchange in Mexico. Bravo. We have Irene Fialka. Irene, happy to have you here. She's CEO of Inits, Vienna's high-tech incubator. We have Kristin Siegel, the third lady on our panel, head of EMEA at Tonic, a global community of assets owners who want to make this world a better place. So we will speak about it also in a few minutes. And then Luka Ziganek, partner at MCC Capital, which is a blockchain fund. So, dear panelists, I kept this introduction very, very short, actually, because like in the email before, I asked you to start this panel with two questions so that you can have your 1 minute and introducing yourself. We call it the elevator pitch. So my first question would go like to Maria. I would love to start with you. How would you introduce yourself in 1 minute? And maybe I can add a second question also to round up this first round of introduction. What motivated you to start pushing on the SDGs in the very first place? Maria?
Thank you, Dejan. Thank you so much, everybody. I'm joining you from Mexico. Here is 6 a.m., so I'm very, very glad to be here with you. I'm the CEO of the Mexican Stock Exchange, the newest Mexican Stock Exchange, which is the second one. We started operations in 2018, and we were basically focusing on trying to deepen the Mexican capital markets, tapping on PE and VC opportunities that I knew from my prior employer, and that I wanted to take to markets. I'm also an entrepreneur. I have my own company, and I'm board member of public and private companies. And personally, I'm very active, passionate, loving, mother and wife, and I'm deeply committed with my country, with gender equality, sustainability, and a strong believer that this financial sector, and especially the stock market, can be a social equalizer for all. So that would be my pitch. Do you want me to continue with the second one as well?
Another minute with what motivated you in the first place. You already said you're very passionate and obviously an influence as well in Mexico. What motivated you to pay that much attention when it comes to the SDGs and achieving them?
When I was at the AMEXCA, which is the Mexican Private Equity Association, we were only basically of about 200 funds, not even 5 of them were impact investing. And so it was really shocking for me to see that. And I was only the only woman at the table for a long, long time. So from the early years, I'm talking 10 to 7 years ago, I really was moved into those topics: sustainability, diversity, and later on, of course, when we saw what happened with the earth and what happened with COVID, everything was just accelerated. No, so COVID was a market for Mexico. We thought we would just take everything back and just look at the urgent things like healthcare, but it was not the case. It was a complete change of mind for Mexico. The pandemic was forcing us to reconsider almost every aspect that we saw, social, class, gender, healthcare, everything. So I'm really, really glad to see what Mexico has become now. Everybody is very interested in the topic. Investors are moving around, and since I am in the stock market, I believe BIVA has a very important role to play. Stock markets are the catalysts of the ecosystem. We are able to facilitate and to allocate capital along different companies, along different industries, and so we believe we have a major role to promote integration of SDGs and ESG policies and actions within all stakeholders. So I am very convinced of the role that we play as a stock market, and I'm playing as a CEO of a stock market, being a woman, the only woman in Latin America, the third one in the world. So I am really, really convinced of what I'm doing, and that motivates me, Dijan.
Much for that. Irene, I would love to continue with you. What is your 1-minute elevator pitch when it comes to introducing yourself? You must know how this goes because you are also the second grand dame in the startup ecosystem.
We train our startups.
Yeah, exactly.
First, I would like to say thank you for the invitation to being in this amazing panel and to being at the conference. My name is Irene Fielka. I am CEO of INITS, Vienna's high-tech incubator. We have supported deep tech startups since 2002. I personally started at INITS in 2004 after having done 10 years of research in molecular biology. I studied genetics molecular biology. In an ecosystem that was literally not existing, trying to build that ecosystem, help building it up. And it is as still, unfortunately, as of today, it's pretty much male dominated. So I also started together with Selma Prodanovic, started a female investing group that we have run since 2013, and another group that focuses on women in health IT, which is not a female-only group, but males are also invited. But the idea there is to move the needle on the gender data gap in healthcare. So that's me in a nutshell.
Thank you very much. Continuing with Christine, can you hear us? Are you here?
Yes, I'm here. Hope you can hear me too.
Oh, thank you.
Thank you, Dejan. Yeah, thank you also for the invitation and great to meet you all here. I'm Christine Siegel. I'm calling in from Munich today. Maybe to answer one of your questions, like, do I think that only financial capital is important? I personally think no, it's absolutely using all the different ways of capital we have available. And one big one is also human capital. And so that's, for example, for me, how I spend my time. I'm leading the Tonic community over here in Europe, Middle East, and Africa. Maybe a few words about Tonic. Tonic, we are the global network of active private impact investors. So mainly high net wealth individuals, family offices, and foundations who are investing in impactful companies, in startups, but also who think about other asset classes. So where do they have their cash, which stocks they invest in, how they maybe can be active as a shareholder. So really looking across the spectrum of capital. And I personally am really delighted to help those 500 investors worldwide on their journey to find investment opportunities, to help think them through their strategy. Because I personally, my background is for the financial industry. I used to be a portfolio manager. I used to work for several private banks, but always focused on traditional investing. So there was no focus on impact. And about 7 years ago, for me, it was that I always, cared and was volunteering in my leisure time, on my vacation. But I always thought I spend so much time at work and I only have so little free time. Like, how can I actually merge both? And with impact investing, where you try to achieve not only a financial return, but also a positive social or environmental impact, that was kind of the epiphany for me that I knew, okay, I have to go into impact investing and support investors in this regard. So I hope I made it in 1 minute. Looking forward to the conversation.
But this is not a startup event, so I will not stop you, even if you overexceed a little bit, because your voice and all of the panelists are very, very important, and I definitely will not stop you. But thank you for that. And last but not least, we have a gentleman on stage as well. This is Luca. Luca, can you hear us?
Yes, of course. Hi, everyone. Thank you for inviting me to this wonderful event. I'm currently a partner at blockchain fund, MetaChange Capital. So we invest into only blockchain focused companies. Prior to this, I was co-leading an accelerator for blockchain, also investing only into the blockchain startups, early stage, and accelerating them. And before that, I had my own startups. The last one I scaled and exited on the stock exchange, managed it, and through that started going into investing and blockchain. So for the second question, it's kind of mixed. I also joined blockchain because this is a world of completely new business models, which are impacting a lot of things on different levels. So for me, this is a wonderful combination where I can support the founders. We're going to come to the question later, of course, with capital, but also with human resource, and push them to see how will they impact the new world they're building.
Where are you right now?
I'm currently in Sofia, Bulgaria.
We have a really international panel, I think, from Mexico, Sofia, Munich, Germany, and also I think you are in Austria, right? Very international. Thank you all for tuning in, also joining this panel. Okay, thanks for this. I started this whole panel with, is money really the influencer, is going to be the really influencer when it comes to changing these and achieving these important goals? And if I remember correctly, Maria, you said financial markets are the catalysts. Nevertheless, we heard now twice that human capital is also very important. But my question to you would be, why do you think is just the financial market, the money actually is really ruling the world and is going to be the change maker here? And do you also think it's the only one, the biggest one, if you can rank it somehow and compare it with the human capital?
Thank you. I wouldn't say capital would be first place, before human capital, not at all. I do think financial systems and the market, it has a very important role, since you can really allocate money, capital to those initiatives to those ideas, to those projects, to those companies that follow your values, that are, looking to make a change in the world, either by climate change, either by a social change, or at the governance part, as it has taken a lot of impulse here. But I do think that if we are able to play a role in this allocation part of the resources that we need as a company, as a project, as an entrepreneur, to get the resources at the time, the perfect time and moment that we needed to change or to add or to bring technology or to innovate or to bring new ideas. That is really, really important. And I'm not only talking about capital allocation, but also maybe join other ideas from other companies. And also the markets can do that. So if you find a company or a project that it's following an initiative that you feel comfortable with, and that you feel that the values go along with you, you can join forces from your point of view. You can say, hey, someone would think, hey, my I don't know, $1,000 account is not going to change the world. It does change the world. If we act collectively, it does change the world. So we can really, reunite ourselves and make things happen from my point of view. So it's a human capital. It's of course it's a capital. It's allocation to values, and it's a joint force that is all together being part of the opportunity of being in capital markets, at least as I see it.
Christine, you mentioned the human capital, which was confirmed now a couple of times here in the panel already. And here's the thing, I am trying very hard to also change a certain topic, and that's namely the failure culture. And what I have figured out is that there are a lot of tool sets how to do that, but without a specific and the correct mindset, actually, there is no change to be done and achieved. So, Christine, when you say, and here, like Maria speaking also and saying the money, even if it's just $1,000, but we will come together, we can have an impact. I would call money a tool. So, would you say, do we have the right mindset to change achieved already, in order to change and achieve the SDG goals? Because you're working with a lot of investors, if I'm not mistaken right now. And do these people already have the mindset? And if they do, is it just a bubble where you are, walking around? No. How much power is there behind the mindset and understanding first the problem, and then whatever tools are needed to achieve this SDGs? What do you think about that?
Yeah, wonderful question. Thank you so much, Dejan. And maybe on this mentality that you mentioned around failures. Actually, I also lived in the US for 5 years in San Francisco. And there I found a clear difference actually between the mindset in the US and the mindset in Germany, for example, where I feel like in the US, like failure is way more appreciated and actually accepted, where it's rather even a strength. Like, oh, great, you already founded 5 companies. Maybe 4 of them didn't go well, but wow, you learned so much with that. And I feel like, I can only speak for Germany, but maybe also for some other European countries, it's still failure is not so much accepted. It's really like seen as you did something bad, you did something wrong, and not so much as you have something learned out of that. So there, I think like cultural shifts, mindset shifts certainly can help, maybe also in this transition. But coming back to the investors, so there actually we do see that consciousness or mind, awareness is so important, because thinking about the financial system right now, it hasn't served us so well in terms of a positive impact on a society or the environment. And the question is like, why hasn't it changed so far? And often it comes down to like the consciousness of each individual person. And I would agree with Maria that we shouldn't underestimate what the impact of each individual can have, whatever small contribution it is. So that absolutely does sum up. But it also goes like not only from the investors, that they are really conscious about, for example, talking about the financial capital, what kind of maybe also negative impact the financial capital has. When we talk about impact investing, we always think about the positive impact. But what currently in the way of, let's say, traditional investing, not considering impact, is like people are not aware how much damage they do actually with some investing. So just getting that into the mindset of people, or just also starting to get in touch with their investments. For example, we do see a lot of investors who don't have a finance background, just like, earned a lot of money, either inherited it or like, through a sale of a business, then just give their money away to an advisor and don't really interact with it anymore. And I have like one actually tragic example. It's a cancer researcher. So she is like, really working on finding cures for cancer. And then at some point, she actually asked her financial advisor, so yeah, what have I actually invested in? And then it turned out that 3 out of 10 top investments were tobacco companies. So there you would say, that's not really values aligned, right? So I mean, on the one hand, you're trying to do this with your human capital. On the other hand, your financial capital is working against it. So just becoming aware of that really like all your capital has an impact, and yet you start maybe owning that, having a look at that, and becoming aware like what kind of impact you can have with your financial capital, with your human capital, I think is super important to start this change in the world that we need to see.
The money in the first place and have to invest it in aware of the issue, and then we look for nice projects where we can change the world.
Sorry, you were cutting out a little bit. Could you repeat that?
Maybe it's my headphones. Can you hear me now?
Yes, that's better, I think. Yeah.
I tried to say, listening to your answer, I would love to know, is the money wrongly invested in the first place? Should we first invest the money, cash, into building awareness for the problem, and then in a second round, we try to solve the problem itself?
I think by investing the capital in the right projects, yes, that are solving the problem. So I wouldn't necessarily say it's the one and the other. I guess it depends. If you have cash, then it's also thinking about like, where does your cash lie, right? There are actually banks out there that are only investing or like lending the money to sustainable companies. That would be one way actually to shift your capital. And then certainly having a look like, if you have already investments, have a look, what are they investing in? Like what kind of impact they have, and maybe then switch them around. And then when you look for new investments, then certainly actively looking about, okay, what are they actually trying to achieve in the world? What kind of impact do they want to have, and maybe have had already in the past?
Struggling with, to be honest, is let's take another example. Let's say companies want to become agile, right? So what they do in the first place, they have a lot of coaches and use tools in order to become agile, and then they fail. And the reason for that, I would say, is because they just use the tool. They focus on the outcome, let's be agile, but they never understood in the first place, or invested money in understanding why we should be agile. What's the benefit? What does it mean to be agile? So that's the problem I'm maybe seeing when it comes to SDGs. There's a huge project. Let's invest money to achieve certain KPIs, but nobody understands the real benefit and the why behind that. So my question was around that. Do we have to first invent into the why and have 8 billion people understand that's why we need the SDGs and achieve them? And once we have that, it might be easier to get closer to the goals.
Right, now I understand you. Yes, I agree. I think investing in that kind of education, also in the schools and like continuously, I fully agree. Yes, that's very important in this change.
Agree, then please do so as well. It's fine to disagree, but that's just something that in different aspects I could I analyzed that and I saw it, and I'm always struggling. Why don't we do first the why behind that, and then it's easier to achieve and to do the how and the what. Irene, I would love to ask you, so we just mentioned a little bit this topic of failure, but nevertheless, you are working with a lot of startups, you're working on innovating, and innovation, by my understanding, would be the outcome of an experiment, or in other words, it's trial and error. So from your perspective, how much trial and error is actually allowed? how many times are we allowed to fail in order to achieve the SDGs, and how many times are startups willing to fail in order to achieve the SDGs? Irene, what do you think about that?
Yeah, then these are tough questions, but I would like to add something to the previous question. Is money the only thing that makes the world go round? I think passion makes the world go round. And passion might be a little bit driven by money, but it's definitely in people. And I'm very strong about that. It's the people who drive change, who drive businesses, and who drive also change in favor of the Sustainable Development Goals. How many times can we fail? I believe that we may fail once, but we need to learn from that failure and not fail the very same way a second time. So I think that's very important. And you can see that in every experiment that scientists do, but also in experiments that entrepreneurs do. You know that lean startup methodology is really all about trial and error. Have your hypothesis just like a scientist, yeah? What the customer really needs, what is the passion of the customer, how to grasp it, and then keep learning. Yeah. So I think we may try once, but not twice. But of course, there's always different mistake we can and sometimes must make, and then in order to really move on. How many times may we fail in terms of the Sustainable Development Goals? I am afraid we may not fail many more times. We really need to get this done. And that's also one of the reasons why we launched another program with focus on deep tech startups, as we have always done it. But with a focus on deep tech startups, focusing to solve Sustainable Development Goals. And we do that together with our partner Impact Hub and our partner Austrian Development Agency, ADA, who is really funding this. And the idea there is to help further advanced startups, so we might call them scale-ups, to enter markets that are not easy to reach in developing countries, because we must not leave these countries behind. Europe, I believe, is pretty far ahead when it comes to regulations, etc., and with a focus on really moving things by the needle. And maybe that's also another force. I think policies make the world go round also, but the developing countries, they have other issues sometimes, and the idea is to help them to become sustainable faster, basically.
Very much for that. Luca, so you mentioned blockchain at the beginning, which is also, it's for some of us maybe as a new technology, a new way to work on innovative results. Would you mind giving us a short summary or explanation what blockchain is, and how do you think is blockchain going to help us achieving the SDGs?
Sure, absolutely. So blockchain as technology is pretty much our infrastructure, right? So it's stack of technology on which people will build, to do different things, same as we had the internet. I always see blockchain as something on top on the internet layer, so one more layer. So to not go too deep into technicals, we can do that a bit later, but pretty much what it allows is decentralization, meaning that in a way, when you look at it, it's giving power back to the people that are participating inside. So let's put it concrete in an example. I get proposal that we invest into startup in Kenya, which they are pretty much kind of building a platform which is having farms of chickens. So what they want to do is that over that platform, people can invest through tokens, which is part of the blockchain, through their platform, and pretty much get revenue share. This would be through video, this would be through different things. They cannot do it through bank because literally they don't have a bank account. So this is, for example, one of the impact. You can go to the really rural parts of the world and give them the power to actually push something in their countries. Maybe another example is, so United States has, of course, a lot of people which immigrated there to get the better living. Now, they send a lot of money back, for example, to Southeast Asia. They have a lot of people from Philippines. They usually do it through the services which are known to us, like MoneyGram or something like that, and they charge them huge amounts, right? So they can take 10, 15, 20% on a transaction when they send back money to their families, so they support them. Well, they discovered blockchain in this regards. Now sending, for example, stable coins can come as cheap as 0.5%, 1% maybe. And so at the end of the day, they're giving back more to their families in order to sustain. So those are some of the examples how blockchain is currently impacting the world.
Right now, we're connected to money again. So is
Yes.
blockchain, is this the only reason why blockchain is existing, to improve the money flow? In what way, however, or is there another way to use blockchain technology to make this better? Put it simple.
Absolutely. So pretty much when we are looking at that technology stack, it's really new. It's relatively new. Definitely, it's still in the deep tech sphere. So you need to put a lot of human capital inside of it first to develop it. What does it mean? You currently cannot hire enough people in the space because there isn't enough educated people that can work inside of it in order to grow enormously. So you need to put your human capital inside, which after that will come, of course, capital in order to grow that, to grow the education. What happens next is that we are now looking at the different type of models which are emerging. And I'll give you one example regarding this. Money transfer is fine, but what happens when everyone has your data? You are on Facebook, you're on social media, pretty much they're gathering your things and then retargeting you and then pushing ads into you. Or what happens when you want to donate money to do some impact because you just want to do it, you want to donate to Afghanistan, you want to donate to Iran, Africa, doesn't really matter. A lot of people don't want to do that because they are not sure where the money goes. So through this technology, you can have tracking, full tracking. Everything is going to be transparent. Same happens to the governments. So pretty much everything can be trackable from not only capital wise, but how everything was used. And this is giving a layer of trust. So this is actually what's happening with the blockchain.
Irene, you also, if I'm not mistaken, you added something with, is this a question? Is this trust? Or it was a statement? It is trust.
Definitely.
It is trust.
Yeah.
So, Luca, also thank you for that. I'm having two more questions. Actually, I have a lot of them, but two more that are burning for myself. However, Sophie, what's happening in the chat? Do we have any questions coming from the audience?
Absolutely, we do. We actually, like you said, have two burning questions from our audience. And I would like to start with one that was actually just submitted by one of our previous panelists, Marion Waltz. Marion is sharing that apparently there is still a massive shortage in real investment opportunities in impact investing, so that are large enough with real measurable impact. What is your view on this, and what needs to happen to change it? How can the problem of also impact measurement be solved? Please, Irene, I see you raising your hand.
Yeah, I can start and answer, give it a try. I think when I started at INITS, impact entrepreneurship was not even there as a term, so to speak. And when it started to build up, what I always said, our deep tech startups are usually, or the entrepreneurs are usually just looking for the money and make gains, whereas impact entrepreneurs often only look at the impact and forget to look at the money. And I think it's attitude that we need to change. Impact entrepreneurship is not only about impact, it's also about creating a long-term impact, yeah, and for you need to earn money. And I think that's a business model question. It's an attitude question. It also sometimes, for instance, an edutech entrepreneur once told me that education is, of course, has impact, but they are, in the eyes of the parents, they are not even allowed to ask for money because it's in the minds of the people that education should be free in Austria. So I think it's all the attitude on every level that we need to work on, that impact really needs money to create impact in the end, but everybody can earn money also. And I'm getting back to the passion. I believe that even our deep tech entrepreneurs in the future, they will be able to hire people only if they also consider impact things, social and environmental impact, not only economical impact, because the people, my kids, they grew up already in schools where impact and environmental issues are being trained. Yeah, so the next generation grows up with more awareness about impact, and they are the talents of the future. We must be able to hire them and create passion in their hearts to work for our businesses.
I think that's a fantastic answer, and it also leads into our next question, which I would ask to our group of panelists again, who can join also for this question, because here it is: how can you make impact investment more mainstream? So how do you attract more capital to allow social enterprise to scale and have a bigger impact? We heard from Irene now attitude and passion as two large contributing factors. How does the rest of our panel view this?
I'm happy to jump there.
Sorry, I'll jump after you.
Okay, sounds great. Now, overall, I actually would say I've seen really a massive increase of impact investment opportunities over the last year. So maybe 5 years ago, there wasn't so much out there, but really every year, more funds, more social entrepreneurs come onto the market. I think it goes hand in hand with what Irene said, that for young people also, like, their passion is really important. And many of them do want to start, an impact company or want to work in an impact company. So a lot of that is more shifting into it. And so coming to the second question in terms of mainstream, I think this mindset change is also helping to get impact into mainstream, that we actually don't call it impact investing anymore, but it's just normal investing, that you are considering the negative impact and positive impact of your, on the environment, on the society. So I think more and more it is, especially here in Europe, with also Friday for Futures movements. I think it's in more and more people's minds and also words. So I think we are really on a good trajectory that it is becoming mainstream. Maria.
Here's a question also for you, Christine. We speak about impact here, impact there, but how do we measure actually then the impact that we want to achieve itself?
Yeah, great.
Can I just jump in
Yes.
on the last one? I wanted to tell you a couple of ideas, bringing both questions in. I think before we saw, as you were saying, we saw a lot of entrepreneurs, and I mean a lot, but some entrepreneurs looking up, looking for capital, looking for resources to get along with their projects. But now we are looking also at top-down pressure. We see a complete change of mind within the investment ecosystem, within the investors that have fiduciary duties and that are following more than 1/3 of the assets allocated in the world. So I mean, it's really impressive what we've seen. So the pressure top-down, it's also moving companies and corporations along. So what we've seen was before we issued more sustainable bonds than ever from government, and now we're issuing green bonds, social bonds, forest bonds, every bond, but now from corporations as well. And so we are looking this as a mainstream already. So it's not now that that are only looking for financial impact. They're looking also for impact as well. So ESG impact. So it is a mainstream. It will become a mainstream, and we have now top-down impulse, but also from the bottom as well. So I think mindset is changing all around.
Thank you, Maria. Please accept my apology for forgetting you wanted to answer something. Maybe I can influence you a little bit with this Mexican design element here. So please, again, sorry. But very good answer as well. And coming back to Christine, I just ask you how to measure impact. Is there a solid way to prove that there is impact happening, or is it just like a gut feeling? And very hard to understand that for me.
Yeah, great question. And that's certainly a developing field. I would say if generally for impact measurement, there are hundreds of different frameworks out there, how you can measure impact. And that is a problem in itself. So there is some standardization and harmonization going on in the industry right now that we can come up with ideally one framework that we use. Because thinking about the traditional finance world, there are two metrics. It's risk and return. Once you want to add impact, it's not a third metric, but it's hundreds of different metrics, like the way how you measure social impact, environmental impact, all different kinds of ways. So what we see is that we also don't want to overwhelm the social entrepreneur with 5 different investors asking for different KPIs or metrics, but really having the conversation with the entrepreneur, like, hey, what is your business model doing? What are you actually working on? And maybe the KPIs you are measuring for your business are impact KPIs in itself already, because you do want to, get children into school, or employ, or provide housing for unhoused people. Then you probably are measuring it anyways, how much you have built, and that will also be an impact KPI. So I think that really is a developing field. Bringing in the different stakeholders to the conversation, the social entrepreneurs, the investors, also governments, important, who are working on some regulation, I think will be important. I would say we are not there yet. It's not perfect yet in terms of impact measurement, but there are a lot of initiatives out there that are trying to solve this.
Actually, Maria, based on what Christine just said, that it's still hard actually to measure it. How much, if at all, of greenwashing is happening right now? So that companies kind of claim, yes, we do a lot and we're very good in it, but as we just learned, it's hard to prove it. How much do you think do they use this to highlight their brand and to influence the market in a positive way without actually really doing something? The classical greenwashing effect. How much is this happening?
I mean, greenwashing is one of the greatest challenges that we have now in sustainable investment. All kinds of companies and brands are starting to use the word sustainable in their strategies. We have T-shirts that have ethical cotton or green car on its stock issues, and companies are increasingly interested in showing off their green credentials and initiatives, and that's for sure. And I think what I think it's as a consumer, we need to have a critical view, to be more aware of the consumption of the companies, on the investment we are doing as consumer, and make pressure to companies with our purchasing power. But also investors have a very important role, and here we need to trust on their due diligence processes and understand that every investor have different point of view, looking in or different important things to look at when they value a company within the ESG metrics. So for many investors, a company could move forward. For others, would not. So we need to trust those due diligence from the investors, and as a consumer, we need to pressure on our purchasing power. And I think those together will make greenwashing, at least fight them.
Thank you very much for your answer. Sophia, how is it going? Actually, I think we overrun a little bit with our time, didn't we?
I mean, it's hard not to when you have such a great panel and such a large topic to discuss. So I really want to thank everyone for your insights, and maybe handing it back to you, Dejan, just for a last word before we move on to our next session.
Yes, the other one was should have started 5 minutes ago. So I would say thank you very much to all the panelists for joining us and sharing your insight on that. One thing that is my takeaway, that money is not the only and the sole to change and achieve the SDGs. Is definitely also humans in the first place. In what way, however, actually, is it passion, the policies, the blockchain technology that we use? Yes, it has to be funded with and by money, but nevertheless, it's human first. And that's a great and very positive takeaway for me. I hope you all had a fun like I did, very insightful session. Just want to say thank you again for having me as well, and wishing you now all the best with the next panel of the day.